Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, coming out of the jobs report we had Friday, better headline job growth than expected. We've seen those rate cut odds for the 50 basis points at the meeting later this month dissipate, but still, we got 25 basis points fully priced in. As we said today in the Morning Express, the Federal Reserve is in the driver's seat, and that's been a narrative of ours for a long time now. But as you've seen some of these rate cut expectations dissipate a bit, that has brought the market in. Now, it doesn't mean we aren't going to see a cut, but you get better growth numbers, especially as we talked about in the Morning Express, the manufacturing payrolls. It could start to show that the economic growth is turning a corner a little bit. But Fed Chair Powell talks tomorrow, and until then, we're seeing the equity prices come back in just a little bit here today, from Friday and into today. We have the major three-star support now as that previous high in the S&P, 2961, 2969. Big pocket, a lot of support there. Traders jumped in front of that on that pullback very quickly early Friday. But that's not the only level we're really targeting to the downside. We lay a landscape out in the Morning Express. Check it out. And then with the NASDAQ, you would achieve that all-time high on Friday for the front month NASDAQ, or last week for the front month NASDAQ, and then it started to come back in a bit. So we also have a landscape there with some of the levels to look at, but ultimately right now we're pushing through 7,800. 7,800, 78 and a quarter was a level that we were holding. Below there, it encourages some extra selling, and that's the same way we're looking at with the S&P. There's a little bit of path least resistance lower, just as the market consolidates a bit. This is healthy. Don't get bearish here, but if it does go below 2944, 2940, then you could see quite a bit of a larger slide. That's still about 1% away in the S&P. And then with crude oil, it is moving higher today off of a sharp sell-off through the middle part of last week. Take a look at where some of these resistance levels are. 58, 58 and a quarter is keeping a lid on the rally. Above there, it could start to get bullish in the sense that it neutralizes last week's weakness. But you know, we see how this plays out where we close today. The levels are again on the Morning Express. And then for gold, really we're seeing a constructive landscape above 1390. We want to continue to see higher lows in gold. Last week's rip higher shows that there really is some larger forces at play here. But again, it's about that picture of what we're seeing on rate cuts. It's a little bit of a slower or less dovish Fed pricing in now. Fed Chair Powell tomorrow. Going to be crucial to see what he has to say. But for overall, right now, we remain long-term bullish gold, less bullish in the near term as we get a little more clarity on this technical landscape. Give us a call. We're here to help with anything. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.